The type of bank account you open when you arrive in Canada can either cost you so much money or earn you so much money. And most newcomers get it wrong. Here's the thing, the banks will definitely provide and share offers that will make them profit, which is why understanding how the banking system works is super important. In today's video, I'll be sharing with you the key things to look out for, mistakes to avoid, the various types of bank accounts that are available in Canada, everything you need to know to help you make the right decision. So let's get right into it. Hi everyone, I'm Buchi and this is the third part of the Newcomer series. Now in the last episode, we spoke about things you need to do in your first few weeks of landing in Canada, which includes opening a bank account. In today's video, we'll be going further into the details, the key things to look out for in the offers, the various fees that definitely comes with a different type of account, and basically the type of account that you need to open to help you save and grow your money the right way in Canada. Now let's talk about the various types of accounts. First, you have the checking account or checking accounts like Canadians will always say. Now this account is like your day-to-day account. It is for your spending. It's the accounts where you get direct deposit from your employers in terms of your salary, and also the accounts that you use for like purchases and bills payment. It comes with like a debit card that you can also use for ATM withdrawals in case you need cash. Costs associated with this account are monthly fees. So monthly fee on this account can be anywhere between $4 to as high as $16 after your newcomer promotional period. You also have transaction limits, 10 to 15 transactions per month, and any transaction after that would come with like a transaction fee. There's also like ATM fees if you exceed the number of time or use like a different bank ATM. And finally, the most important feature is that the interest rate on this account is zero or second to nothing. Most of these banks will waive this offer for you as a newcomer in your first 1 year. And that's why it's important that you compare multiple banks so you go for the one that offers you the most value. After the promotional period, you can then decide if you want to switch banks or go to like a digital bank that typically will not charge most of these fees. The next type of account is the savings account. Now, in Canada, you have the savings account and you have the high interest savings account. Now, the savings account is your regular savings account with some interest. The interest rate is also small. It's usually between 0.05% to about 1.15 or 1.5% at best, while the high interest savings account would offer you interest between like 1.5% to as high as 4%. Now, I usually recommend that you open a high interest savings account when you open like your checking account. Now, your checking account can be with the traditional bank, while your high interest savings accounts can be with the digital banks that offer higher interest rates. The high interest savings account is a good account to keep any money that you're not using in the next 1 or 2 months. Typically, that's where most of your money should even sit, because not only are you keeping your money in the bank and it's safe and easy to access, it's also earning you some interest and hedging against inflation. Inflation is around 2.5% inflation rates, but I'm definitely going to find out what the exact inflation rate is and maybe target somewhere in the video. But when you have your money sitting in an account that offers you an interest rate that's higher than the inflation rate, you are retaining the value of your money. So any money, say your proof of funds, your emergency funds that you don't need for the next 1 to 2 months of your regular spending, put it in a high interest savings account. For instance, I have a primary checking account, but I also have an account with EQ Bank that serves as both a high interest savings account and a checking account. This is the account that I use for my savings, my emergencies, whereas my checking account is where I put like my 1 to 2 months expenses at most. So my recommendation would be start off with using like the traditional bank on the newcomer package, so you find an understanding on how you get familiar and get understanding on how the banking system works. Then also open like a high interest savings account where you'll be putting like your savings, your emergency funds, and any money that you do not need immediately, just so that your money earns more money while you're keeping it at the bank. Know that when it comes to digital bank, before you make a decision, also check that the deposits in whatever account you're opening on the digital bank is insured. Most of these banks, they have insurance with CIDC, but check out for whoever is insuring the bank so that you are sure that your deposits in the account is covered in case of bankruptcy, which is rare in Canada. But just to be safe, when choosing like a digital bank, check out that the deposits on whatever account you're opening is covered. And in addition, check its affiliation to like a traditional bank, because that also gives it additional covering and you get access to like ATMs for free. Which brings us to the investment account. Now, this is an account for your long-term savings and wealth building. You can invest in stock, GICs, ETF, mutual funds, and also get tax advantage if you use like the tax advantage accounts. In Canada, the Canadian government offers incredible tax advantage account to help boost your ability to grow your wealth tax-free. You have the TSFA account. This is a tax-free savings account. It's a savings account where you can either invest in stock or just keep your money to earn interest tax-free. Unlike the high interest savings account, the interest you earn on your high interest savings account is taxed during the tax period. But if you're saving in a TSFA account, your money grows tax-free. The contribution limits per year, which is communicated at the beginning of the year. For 2025, the contribution limit was $7,000 per individual. So if you're above 18 and you just arrived Canada this year, you have a contribution limit of $7,000. And next year, when they communicate, let's assume that $7,000, you have a cumulative contribution limit of $14,000. You also have RRSP, which is for retirement, and this is a tax-deferred account. The money in that account is tax deductible, and you only pay tax upon your withdrawal at time of retirement. Then you have the First Home Savings Account, FHSA. This account is both tax deductible and tax-free, and is usually for first home buyers. We'll go deeper into the details of each of these tax advantage accounts in the subsequent episode. But using an investment brokerage for your investment account actually helps you grow your money faster and invest in other investment options like stock, ETF, government bond. And I would always recommend that you choose like an investment brokerage like both Simple or Questrade, as against going for the traditional banks that can charge you fees for opening investment accounts with them. I typically use Simple and it's very beginner friendly. I would also include like my referral link in the description. When you use it, you get a sign-on bonus. And trust me, it's like the best platform. And they've also tried to advance their platform to offer basic banking services. So if you're already in Canada and you don't have a Simple account, it's definitely a good place for you to start your investment journey. So what documents will you need to open your account? First, you'll need your primary identification. This is like your passport. You'll need to go with like your original copy. And you would also need like your immigration letter, confirmation of permanent residence, or the letter you get from immigration clearance from the airport. You need to go with the bank with it. You need your SIN number because they need that to open like your bank account. And sometimes they also ask for like a secondary identification, but not all the time. If you are new, I think they can waive that. But if you've been in country, they will definitely ask for like your secondary identification, maybe like a driver's license or your health insurance card. Any of those can work as a second identification. The next thing is an address. It can be the hotel or the Airbnb you're staying with, or the address of maybe your siblings, any address that you're staying with, because your account needs to like include like an address where they will send like your debit card or your credit card if you choose to open one on the day of your first appointment. But the best thing is, before you go into the bank, call them, book an appointment if required, and ask them on the phone for the documents that you should come along with for the account opening. A quick recap with the optimal setup. Open a primary checking account with one of the traditional banks. Look out for the one that is most convenient and offers the best value in their newcomer package. Open a high interest savings account with a digital bank. Go for the one that is offering the highest interest and ensure that your deposits are protected. And finally, as soon as you're comfortable, you can then add an investment account. Open a TSFA account as soon as possible so you can start growing your savings tax-free, and you can grow it exponentially by investing in stock using platforms like Wealthsimple. If you are already in Canada and you already have a checking account, if you don't have a high interest savings account or an investment account, now is the time for you to open one. In the next episode, I'll be talking about credit cards, the different types, the mistakes to avoid, how to read your credit statement, do's and don'ts, and how to build your credit score the right way. So if you found today's video helpful and you've learned a thing or two, do well to give it a thumbs up. Don't forget to subscribe to the channel. It actually helps pass the message to as much people. Share it with friends and family, and I'll see you in the next video. Thank you.